What's up, everybody? It's your boy Mike Macklin, aka Money Mike, the financial Thanos, and I am here with a question for you. Have you ever wondered how can you pay less taxes, or even better, how you can pay no taxes? That question was a question that basically started my financial literacy career. I actually started with wanting to know how I can legally lower or eliminate my taxes. And it took me on a great financial journey. So if you're asking yourself that question as well, make sure y'all stay tuned, because I am actually going to talk about how you can do that today. So if you're ready, I'm definitely ready. Let's go. What's going on, everybody? It's your boy Mike Macklin, aka Money Mike, the financial Thanos, because I'm snapping my fingers and I'm turning your financial problems to dust. Today we are talking about how to legally pay little to no taxes. So I actually found a great video that's going to talk about this. I'm breaking this up into a couple parts because it's a little bit of a longer video. I did watch this video already, not in its entirety, but I did watch part of it. So I wanted to share that with you today. Make sure that you stay tuned to the end to get some great information and a special offer at the end of this video. So if y'all ready to get started, we're gonna get right into it.
What I want to do today is I want to go over 7 ways that you can legally, keyword, legally pay less money in taxes, and maybe even not pay any money in taxes. That way you can do what rich people do and keep more money in your pocket. The first thing you can do to no longer pay so much money in taxes is to stop earning money. This is actually what wealthy people do. See, the IRS taxes you based off of how much money you earn. And so if you can show the IRS that you didn't earn any money, well, then they can't tax you because you didn't earn any money. If you only have one stream of income from your job, this one's going to be harder for you to implement right now, because what wealthy people do is they show the IRS that they didn't earn any money. What they do is they make money from their investments and their assets, but they don't actually earn any money themselves, because when you earn money from your job, that money is automatically taxed. If you own a business that makes $100,000, you don't pay taxes on how much money you make, you pay taxes on how much money you keep. So if you make $100,000 and then you spend all $100,000, well, you only have $0 worth of taxable income because you made $100,000 and you spent $100,000. A couple of years ago, my accountant calls me up and he says, Jaspreet, we have a problem. You have a big tax bill coming unless you can go out and spend more money. So I had to figure out how I could spend $300,000 in the most effective way possible in my business. That way I'd have a smaller tax bill at the end of the year. Now, if you have a business, you don't want to just spend the money to spend it, because then that's just like throwing the money in the garbage. Yeah, you'd have to pay some of that money in taxes, but it'd be better to spend some of the money in taxes and keep the rest of it than just taking all of that money and throwing it in the garbage. So now what you're trying to do is you're trying to figure out how do you take this money, spend it, but grow the business. That way now your business is worth more money and it's going to make more money in the future. That way you don't have to spend that money in taxes, because if you don't spend that money, then half of it is going to go to the IRS. But if you can spend that money and make more money in the future, well, now you're using that money to invest in yourself and make more money instead of giving it to the IRS. So I spent it on things like consultants and classes and advertising and marketing. That way now I'm spending the money. That way I don't have to pay as much money in taxes, but I'm spending it in a way that's going to benefit the business in the long run. That way I can make more money in the long run. And this is the same reason why you see so many YouTubers making so many videos at the end of the year, because they're trying to capitalize on all the advertising revenue that companies are spending. Because at the end of the year, October, November, and December, this is when companies are looking at their books saying, oh my God, we have a big tax bill due. Let's spend as much money as we can in advertising and marketing. That way we don't have to pay so much money in taxes. That means they're paying more money to YouTube to spend on advertising, which means that YouTubers are going to make more money per video in October, November, and December, because you have so many advertisers that are spending money on advertisements. So YouTubers are trying to capitalize on that and make as much money as possible towards the end of the year. And then comes January, February, and March, and now all these companies run out of money and they're not spending any money on advertisements, and now YouTubers are struggling to make any money in January, February, and March.
All right, so now let's recap on what he just was talking about. So the first way to pay next to nothing in taxes is to not earn any money. Now, it may sound crazy, but the long and short of it is what you have to do is understand how the tax code works. And the way the tax code works is they tax you on the money that you actually earn after any adjustments to income, deductions, and credits. Now, before I get too far to that, I want to talk about the types of money that you can make. And this is what kind of factors into that equation as well. The first type of money is earned income. Now, it's another name for earned income is active income, meaning income you work for. The second type of income is passive income. This is income from items like real estate or something like that, to where you're not actively involved, but it's making you money. And this also gives you certain tax incentives, which is how it lowers how much money is actually earned. And then finally, you have what's called portfolio income. Now, portfolio income is things like stocks, art, things like that, which are like collectibles or something. And basically, the way that works is it's basically money making money, and it's taxed at the lowest rate because it's one, it's not active income, and two, you also get tax write-offs for that. So essentially what you're doing by basically what he's saying, not earning income, is you're putting yourself in a position to where all the deductions, all the credits, and everything like that makes your tax liability very low or zero.
The second way that you can avoid, not evade, but legally avoid paying taxes is by using debt strategically. Elon Musk really demonstrated how this works back in 2021 because he ran a Twitter poll to his followers asking if he should sell his stock. Now, while that seemed like a harmless tweet, he actually had a hidden agenda behind that tweet. Elon Musk doesn't pay any taxes. And the reason why he doesn't pay any taxes is because of what I said in number one. He doesn't earn any money. He doesn't take a salary out of his company, and because he doesn't earn any money, he doesn't have to pay any taxes, even though he's one of the wealthiest people in the world. Well, back in 2012, Elon Musk was awarded something like 22 million stock options for Tesla stock that he would receive in 2021. When he received these Tesla stock options in 2021, that was the first time that he earned money in years, and now he had to pay taxes on the money that he earned, but he didn't have any money to pay these taxes. That's why he ran this tweet poll, because if he sold his stock, now he has some income that he could use to now go out and pay his taxes. At this point, you might be wondering, if he's one of the wealthiest people in the world who doesn't have any cash in his bank account, how does he afford to eat and pay his mortgage? Thanks to the help of strategic debt. Elon Musk is not surprisingly one of the largest shareholders of Tesla. And so when he starts getting his options or shares of Tesla at $6 a share and the price of Tesla goes up to $1,000 a share, he has a lot of money on paper because his share prices have gone up from $6 to $1,000. Now, he doesn't actually get that money in his bank account unless he sells these shares, but if he sells these shares, then he has to pay taxes on these shares. So what he does instead is he borrows against these shares. He takes out debt. If he has $1 million worth of Tesla stock, he can go to the bank and say, hey, how about you give me a loan for $500,000 and you can use my Tesla stock as collateral. He's essentially refinancing out of his Tesla stock. So now what happens is he has cash in his hand, which is debt, and now all he has to do is pay some money back plus interest. Now this works great, especially when you're in an environment with such low interest rates, because now he can borrow money at 3, 4, 5% a year, while his stock can grow by 10% a year. So he's making a profit by borrowing this debt, and he gets to borrow the debt tax-free. If you go out and borrow $250,000 to buy a home, you don't have to pay taxes on the $250,000 that you get from the bank. And if you go out and you refinance another $500,000 out of your home, you put $500,000 into your bank account. But again, you don't have to pay taxes on the debt that you get because this is money that you have to pay back. It's not income that you're getting. So when Elon Musk takes debt out against his Tesla shares, he gets this cash into his pocket debt-free. He can pay some of the money back back and interest, but the value of the stock keeps going up, so you can just borrow more if it needs more money. This is a strategy that a lot of wealthy people use, where you own assets and then the value of your assets go up. When they go up, now you can borrow against your assets. You take this debt, which is now tax-free in your pocket, and you can live off of this money, you can spend this money, you can live your life, and now you have money in your pocket, tax-free to spend. When I sat down with Robert Kiyosaki, the author of Rich Dad Poor Dad, this is the strategy that he says that he used to become a billionaire on paper, and it is a strategy that made him wealthy. Take a look.
The reason I pay no taxes is because I borrow money. I'm a debtor. The only way the economy, and check this out. I mean, all you communists out there, check this stuff out. I am a billionaire in debt. You know why? Because I get tax breaks for borrowing money. And the reason I am so rich is because I'm in debt. And my friend Dave Ramsey says, live debt free. I'm going, well, you're an idiot. I mean, he's my friend, but I say, Dave, I like debt. He says, I know, but most people can't handle debt. I said, I agree. But that's why there's no financial education in schools, because if you knew how to handle debt, you wouldn't save that crappy dollar you have in your hand. I'd rather borrow the money tax-free.
Now, I wouldn't feel right going to the third point without giving you a little bit of a warning, because taking on more debt does come with more risk. I mean, anytime you take on debt, it has risk, but if you over leverage, then it comes with more risk, because we've seen that if you over leverage on anything, whether it's stocks or real estate, and then you start to see the value of the asset go down, now you're underwater and now you can really struggle. So if you do go down this route of using debt as a way to live tax-free, just make sure that you're being cautious, that you're not over leveraged, and you know what you're doing.
All right, so let's break down way number 2, or strategy number 2 to legally not paying taxes. Essentially, what you're doing is you're creating debt in order to give yourself money, if that makes sense. So your income is now coming from debt, which means basically, like he was explaining, you use your money to buy things like stocks or real estate. So you're buying assets, and what assets are is something that gives you money without you having to work for it. So now in this situation, Elon Musk used these stocks that he owns, which are assets to him because they're making him money without him having to work for it. He's using those stocks that he owns, and he's taking out loans against those stocks. So the loans are his collateral, which is basically, if you don't pay the debt, then they will get that stock, so they will get the house, or whatever the case may be. That's what collateral is, if you've never heard of that. So he's using his assets as collateral and getting money from that. Now, this isn't earned income. This is debt. And so debt isn't taxed. Just like when you buy a house and you don't, they basically give you a loan for $250,000, but they don't consider you earning that money. They basically looking at it as a debt. And another great thing about getting debt as income is the interest that you do pay on it. You can actually write that off on your taxes. So it's a two-way win. And then it goes even further, because if the value of your asset goes up, even while you're borrowing money against that asset, you're still making money. So this strategy is absolutely fantastic. Now, the word of caution that was put out there is like, hey, listen, if you're going to do this, make sure, one, you understand what's going on. And number two, if the value of those assets start to go down, then you might have a problem. So don't break off more than you can chew, essentially, is what that means. So that is strategy number 2 broken down. Now, as I said, I'm going to go ahead and end the video on that note. I will be doing a part 2 and possibly a part 3 to make sure that I don't make these videos too long, but I want to explain them well. So if you enjoyed this video, please go ahead and smash that like button for me, and also comment below if you have anything to add to the first 2 strategies of not earning income or using debt to basically create income without paying taxes on it. All right, people, that is my time. Make sure y'all check out other videos. I talk about financial strategies and things like that. And make sure you keep your eyes peeled for the next video. To do that, what you're gonna have to do is you're gonna have to subscribe and hit the notification bell. That way you know when I drop new videos and you will be in the loop and get this great information. I sincerely hope you enjoyed this video and got value. Again, don't forget to like, comment, and share. And until the next time, I love you. God loves you. He smiles when he sees you, and he sees you all the time, so he's always smiling. So why aren't we? Y'all take care. Catch y'all on the next video. God bless y'all all. Don't. Today's video is sponsored by my company, Money Mike LLC. And in my company, I work with individuals just like you through financial mentoring and coaching, where we talk about strategies to help you to get to your financial freedom, whether it be through making more money, rapid debt elimination, helping you lower your taxes, investment education, or how to repair or build both personal and business credit. Now, if you think you might be interested, my website is in the description box of this video. The website is going to allow you to book a free 30-minute financial planning session with me, and we can discuss if I'm the right fit for you.